Welcome back to the Daily Crypto Report, where we dive deep into the world of cryptocurrency, finance, and the stories that shake the industry. Today, we're discussing one of the most shocking scandals in crypto history, the rise and fall of FTX, once a leading centralized exchange, now infamous for fraud and deception. We'll break down how FTX climbed to the top, what led to its collapse, and the aftermath, including Sam Bankman-Fried's legal troubles. So grab a drink, settle in, and let's unravel the story of FTX. FTX was founded in 2019 by Sam Bankman-Fried, often referred to as SBF, and Gary Wang. It quickly became one of the most prominent centralized cryptocurrency exchanges in the world, thanks to its user-friendly interface, innovative products, and aggressive marketing. FTX specialized in futures and derivatives trading, but it also offered spot trading for cryptocurrencies. The exchange grew to handle billions of dollars in daily trading volume, securing partnerships with major celebrities, sports teams, and even naming rights to the FTX Arena in Miami. At its peak, FTX had over 1 million users and was valued at $32 billion. It was often touted as a symbol of crypto's mainstream adoption. Beyond the exchange itself, FTX owned various subsidiaries and investments. FTX US, a separate platform tailored for US regulations. Alameda Research, a trading firm also founded by SBF, which played a pivotal role in the downfall of FTX. Crypto tokens. FTX issued its own token, FTT, which was used for trading fee discounts and as collateral within the ecosystem. FTX also had significant holdings in other crypto assets and projects. However, this complex web of businesses and assets would later prove to be its undoing. SBF often portrayed himself as a proponent of crypto regulation. He appeared in front of U.S. Congress and met with officials from the Securities and Exchange Commission, SEC, and Commodity Futures Trading Commission, CFTC. Publicly, SBF lobbied for clearer crypto regulations, but critics argue that these efforts were more about protecting FTX's interests than the broader crypto community. Behind the scenes, there were allegations that SBF tried to influence regulations to disadvantage competitors. In November 2022, cracks in FTX's facade began to show. Reports surfaced that Alameda Research's balance sheet was heavily dependent on FTT, the native token of FTX. This raised red flags about the financial stability of both companies. A tipping point came when Binance, a rival exchange and an early investor in FTX, announced it would sell its holdings of FTT due to concerns about FTX's solvency. This triggered a massive sell-off, causing the value of FTT to plummet. FTX users, spooked by the news, began withdrawing funds en masse. Within days, FTX froze withdrawals, citing a liquidity crunch. This essentially meant they didn't have enough assets to cover user deposits, a catastrophic revelation for any exchange. Investigations revealed that FTX had been secretly transferring customer funds to Alameda Research, which used the money for risky trading strategies, political donations, and lavish expenses. Reports estimated a $10 billion shortfall in customer funds. Meanwhile, SBF and other executives were accused of using company money to purchase luxury real estate and fund personal projects. At the center of the scandal was Sam Bankman-Fried. Once celebrated as a crypto genius and philanthropist, he became the face of corporate greed and mismanagement. Other key figures included Gary Wang, FTX's co-founder and chief technology officer, who played a role in facilitating fund transfers to Alameda. Caroline Ellison, CEO of Alameda Research, who admitted to knowingly misusing customer funds. Other executives. Several FTX insiders cooperated with authorities, revealing the extent of the wrongdoing. After freezing withdrawals, FTX filed for bankruptcy on November 11, 2022. John J. Ray III, a restructuring expert who oversaw Enron's bankruptcy, was brought in to manage FTX's liquidation. He described FTX as a company with an unprecedented lack of oversight and accountability. SBF was arrested in December 2022 and extradited to the United States, where he faced multiple charges, including wire fraud, securities fraud, and money laundering. In 2023, he was found guilty on all counts and sentenced to 30 years in federal prison. The FTX collapse was a wake-up call for the crypto industry. It highlighted the risks of centralized exchanges and the importance of transparency. While decentralized platforms gained some traction post-FTX, the event shook investor confidence and led to stricter scrutiny of crypto businesses. So, what can we take away from the rise and fall of FTX? Trust but verify. Always research where you're storing your crypto assets. Decentralized platforms or self-custody solutions may be safer. Regulation matters. Clearer regulations could prevent future collapses like FTX, but these rules need to prioritize user protection, not corporate interests. Beware of red flags. If something seems too good to be true, like FTX's meteoric rise, it probably is. That's it for today's deep dive into the FTX scandal and its aftermath. The story of FTX is a cautionary tale about greed, mismanagement, and the importance of transparency in the crypto world. If you found this video informative, don't forget to like, subscribe, and hit the notification bell for more in-depth stories from the world of cryptocurrency and finance. Share your thoughts in the comments below. What do you think is the biggest lesson from the FTX collapse? Thanks for watching, and I'll see you in the next video. Stay informed, stay vigilant, and stay financially savvy.